Hello everyone, welcome to the channel. Today we are going to look at Kinsale Capital Group, ticker symbol KNSL on New York Stock Exchange. It is traded in USD and today the stock had a big drop of 7% due to an analyst downgrade, which brought the market cap of the company to just below $10 billion. The PE ratio for this is about 24 and it also pays a very small dividend with a yield of 0.13%. Kinsale was founded in 2009 and they specifically focus on the excess and surplus portion of the property and casualty insurance. They have a disciplined underwriting approach and they basically focus on small policies where the average premium per policy is only $15,000. Property and casualty insurance market is large in US, but the excess and surplus market is basically a subsection of that insurance. What happens is the bigger insurers, because their premiums are controlled by the regulators, so they can only charge so much premiums. So they basically underwrite the lower risk policies and leave the higher risk policies to the specialty market of excess and surplus. The trick with ENS is that they are not regulated, and so they can charge whatever premium they want as long as the customer agrees to it. So Kinsale basically does all the underwriting in-house and does not outsource it to the MGAs, which is the managed general agents. They have their proprietary technology, which basically helps them to keep their costs low. We'll specifically talk about combined ratio in an upcoming slide. Currently, they only have 2% market share, so a lot of room to expand. So as I said before, they only focus on the small account E&S market. Their underwriting is disciplined and they do not delegate it externally. Technology is their core competency, driving best-in-class expense ratios. In this slide, their combined ratio is lowest in the industry. So this is from 2021 to 2023. The loss ratio is about 55% and the expense ratio is about 22.1, making the combined ratio at 77.2%. And if you look at all the other ones, everybody's higher than them. And also the premium that they're writing has grown at 38.4%, which is highest out of their peer group. This next slide provides a comparison of how Kinsale has performed as compared to S&P 500. So as you can see, their compounded annual gain from 2016 to 2023 has been an astonishing 51.2% compared to 13.2% for S&P 500. Here is how companies' revenues have increased over the last 10 years. So as you can see from 2015 to 2024, their revenues has compounded at about 40%, whereas their operating expenses have compounded a little higher at 42%. The share count for the company has grown by about 1.23%. So coming to the valuation, I've run this discounted cash flow in Stock Unlock website, and I've used their most recent net income metric of $409 million. So I'm projecting it for 5 years. I'm expecting this net income to grow at about 15%. In the past 5 years, it has grown at 52%, and I believe the analysts are expecting it to grow anywhere from 17 to 20% for the next 5 years. But we'll take a conservative number of 15%. Their shares outstanding will keep it the same, 0.93% growth over the next 5 years. Their dividend growth rate, we're gonna keep it same as the past 5 years. And for a business growing about 15%, I believe 25 price to ratio is justified. I'm looking for 12% return on my stocks. So using those numbers, the fair value comes out to about $480 for the stock, and the stock can compound at 14.6% for the next 5 years. If you liked this quick and short analysis of Kinsale Capital, then please like and subscribe to the channel, and I will try to put out more content like this. And as always, none of this is financial advice. This is all for fun and entertainment. And please make sure you do your due diligence before you buy any stocks.